This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil, and I'm going to give you a stock market update as of Thursday's close for Friday morning. We're going to talk about some of the damage being done to the market and see how severe it is and how important it is, where support might come in. I want to go through the market conditions as well, so we've got a lot to cover. So let's go ahead and get into this now. Okay, so the market conditions, let's start again with the sentiment. Not much of a change from last week. It's really pretty neutral right now, but because of what's going on in the market, next Wednesday, I get the updates on Wednesday, it'll be real important to see how the reaction is. We should see the number of bulls really dropping and the difference between the two dropping. We should see these numbers going down. And if we can get them down, sharply in the short term and maybe see some more bears show up based on this drop, then I think it could set up a situation again where we have this oversold reading because we're at 33. If we get under 30, that's this overbought, oversold. This is going to get to oversold, and we're going to look for more bearish people or less bullish people and get this number down. If we get that to happen, then these are both going to move over to the positive side. And again, that sets up a trading play. It doesn't necessarily mean it's the beginning of something big. It all depends on how much damage is done by the time we get those signals. All right. So again, I use them as a backdrop. They're not necessarily primary indicators. They're more secondary. These are secondary indicators that I'm using to help with timing and trading plays and trading setup. So if we get a pullback down towards support, okay, and this doesn't change. So this is the average true range on the weekly, and that line is starting to flatten out, but it really hasn't turned up yet. Okay, now we're probably right now, both of the volatility measures on both the daily and the weekly are still positive because this is below a declining line and this is below a declining moving average. Both of them are below a declining moving average, but well, actually I take that back. The way it closed just above, okay, so it's above it by 3 cents. So this should actually be now back to neutral. That happened right at the close because I looked at this 5 of and it wasn't above. All right, so that's just crossing, but I put that to neutral. Now, as long as this line is declining, it's at neutral. The moment the moving average turns up, then this is going to turn to negative. All right, so but that's only short term. We've seen the short term movement and we're seeing some volatility, but we haven't seen it reflected on the weekly chart. This is the one we want to really be focusing in on. If we start to see this turning up, then we got to start really worrying about the potential for this market. Right now, I'm still qualifying this as a correction in an uptrend. But if we saw a real increase in volatility, and I think the way it would play out is that we get an increase in volatility and then it would pull back, and then the second time around, so it would be something like this and then coming back up and failing maybe at the 18-week, maybe a 40 to 18 bounce, something like that. That is where we could potentially see some kind of a setup with real damage being done, or risk increasing based on the volatility. So right now, again, this just switched over to neutral. These are both neutral, but with a bigger drop in the market. If we see follow through in the market by Wednesday of next week, we could get we could see the bulls evaporate. So that's really what we're on the lookout for, because this looks like it's headed to an oversold reading for the first time in quite a while. Okay, now before I switch over, because I do want to talk about my, I'm going to go through the 18 chart, my timeline chart. All right, I want to do that real quick because I got to show you something that I think is very important. This week in the momentum, the weekly momentum switched to neutral and the daily momentum switched to negative. All right, I'm going to give you the details as to what that is. Also, trend went from neutral to negative on the daily. All right, we haven't changed the trend on the weekly, and this is neutral. The monthly's trying to pull back, and it doesn't have enough momentum yet to kick in to be calling it positive. They're both neutral from a monthly standpoint. The weekly chart is weakened somewhat based on the pattern on the momentum MACD and ADX, and the daily has turned negative. So I'll go through all of that, but first I want to cover my multi-line chart, multi-time frame. So this chart has an 18-day, 18-week, 18-month, quarterly 18, and a yearly 18. So I'm going to scrunch this up so you can see all of them. So the purple line is the yearly 18. This is the quarterly 18 in red. The yellowish line is the 18-month line. The blue line is the 18-week, and the magenta color is the 18-day. All right, so I got a daily chart with all these overlaid on. I love this setup. All right, so one of the things I wanted to point out is that the distance between the 18-day and the 18-week just wasn't significant. So there wasn't a lot of risk breaking the 18-day. Now, the concern is that the 18-day has been very good at kind of controlling what's going on. So this was a sort of a tell that there was a problem here, this violent break of this line, because when we've seen that, it's tended to at least survive for a little bit. And in this case, because this was breaking so close to the 18-week, it increased the likelihood that we were going to put some pressure on this 18-week moving average. However, the distance between the 18-week and the 18-month is where the concern lies. You see this big opening? This is a massive air pocket, right? This is not much of an air pocket at all. Now back here, we had a pretty good air pocket from the 18-day to the 18-week, and we had a pretty good drop coming down to it. You see how this is like, I kind of call this 18 pinball, right? We break one, we go down to the next one, then we bounce off that, and we bounce around, now we break that. Now, you got to kind of assume, now, this line is more flat than declining, but you got to sort of assume that it might try and meet up with this, and what it might do is pull one of these, bounce around, and this sort of cups around. It takes a little while. Maybe this is going to consolidate. I don't know that we're going to come crashing down towards this line. It just seems like the underlying symptoms in place don't look that bad to me, but I'm not a buyer when the market's doing this. So I'm not the kind of guy that's going to go diving in and try and be a hero, right? Don't put your Superman outfit on and go diving in to save the market, try and buy something right off the low. Don't do that. At least I would recommend not doing that. That's my suggestion to you. I think we're taking out this low. And we're breaking the 18-week, and I think there's enough damage being done that we should at least let this mend a little bit. All right, let's go ahead and get into the time frame. So what we've been talking about now for really since this goes back to July, is the fact that this had gotten away from the 18-month and it never tested the 18-month line. It crossed it when it was declining, and it never tested it. So I think that's why we're dealing with this right now. If it would have crossed here and then immediately pulled back and found support here, then we could be off to the races. But that's not really what happened. It crossed above and ran into resistance, and now we're kind of paying the price for that. Now, I will say we still have MACD above the signal line. We're making our second lower high. Okay, so we are setting up a potential pinch play on the monthly chart. I grant you that. We do have that potential. However, because this line is still declining, I'm more inclined to believe that this is a time issue rather than a price issue, meaning as opposed to this crashing down or something like that. I just have a feeling we might end up bouncing around, maybe have a good month and then come back down and have a couple more months while this is cupping around underneath. That would be more the way I'd be leaning, but we just have to follow the price action, and we're going to start with following the lower time frame. So been talking about the break of the 18-week as being so important. Now, we got a break of MACD about 2 or 3 weeks ago, and we knew that we were going to have another test. This test is more violent than I would have wanted to see. This is not really, I don't know if I call this a test as much as almost like a break, right? I mean, it almost looks just like a violent break of the 18-week. And the fact that it's already taken out this prior low is concerning. Now, the reason why I switched the momentum, when the MACD crossed down and this was still strong, I had it as neutral. All right. I didn't have it as a negative. But look at what's taken place. And I want to show you this. I'm going to zoom in on this. So we had not made a higher high on the red DI. All right. We had made a lower low here. This was a lower low, right? And then we made a lower high. And then we came down and made a lower low. But this is what's important to me. Now we're making a high. So we've made a higher low and a higher high in the red DI. That sort of confirms that we're in a contraction phase. So the DI lines give us a heads up of what's this blue line's likely to do. The blue line is likely to keep dropping and dropping down under 25 just based on what these are doing. All right. Now, is it possible they'll just kiss and just break away and the green goes back up? I mean, yeah, it's possible. I'm just telling you, the likelihood of that happening, I think, is a lot smaller now. I think we're entering in to a contraction phase. And when we do that, we sort of assume more consolidation for now. So consolidation seems to be the highest probability, not falling apart and crashing. I know I've read that out there. I mean, it's a possibility, but it's a small possibility based on the backdrop, I think, for me. Just based on the stock action overall. Is it possible we come down and test this breakout point? Yeah, I mean, we could do that. We could play out that way as well. I don't have to be a hero and know the answer in advance, all right? I don't need to have that answer. What I'm going to do is I'm going to watch what's going on this time frame, and I'm going to watch what's going on this time frame. And I'll key off this mainly because look at how strong the momentum is. You see how the ADX is hitting another new high? I mean, that's pretty impressive. Look at all the volume action. Now, we're getting pretty stretched away, so it's possible we'll try and rally. But the key thing that took place this week is we broke the 18-week and we completed a 1, 2, 3 to the downside on the daily. I didn't think we were going to pull that off this quick. I mean, this was way up here. We gapped down and we ended up breaking right through it. And so the funny thing is what I always say on this channel is if we get a 1, 2, 3 on the daily chart, then we should be breaking the 18-week. That's how you know that you've got a true 1, 2, 3 taking place. So I was a little confused seeing that, but we clearly have a 1, 2, 3 developing and a break of the 18-week. They're in agreement, which is what I like to see. All right. So one of the other things I wanted to point out is the MACD looked like it was trying to turn up here and form a little pinch play, and then it quickly turned back down and crossed back down below the moving averages, and the MACD line kind of rolled back down. And now, and I mentioned this in my report, that this looked more like a zero line reversal now, right? Coming back down through. The other reason why I turned this to negative is the red DI did break out to the upside. Now, look, when we look at it from a bigger picture on the daily, you still had really good momentum to the upside and you still have a low ADX condition in place to the downside. All right, we haven't switched that. But in the interim, I do think it was worth changing this to negative just because of how strong of a negative reading we're getting in the red DI. It's a pretty strong negative. So I want to put it to you this way. If you were to look at this red DI by itself, the red DI has done this, and then just made another big move. So if we look at that by itself, the sellers are pretty strong here. I mean, the buyers have weakened, but look at how strong the sellers have gotten. I gotta respect that a little bit, at least in the short term. Now, if they fall away in a hurry and they come back down, then it'll switch back to neutral on that. But it's not going to affect whether we take a trade or not. But in terms of the analysis, that's how I would read this right now. So as I mentioned, very strong move to the downside. This is a terrible finish to the day because if you look at what happened, just think about this from a common sense standpoint. You get this really big move and then you gap down the next day. You're really stretched away. You've made a pretty big move. You try and pause. You see this little pause. Guys are trying to buy. You think this is going to rally at this point, and it does not rally. All right. So the fact that this closed at the low of the day. Now, I mean, Friday, we've got pretty strong momentum condition in place. It could go either way. They could try and bounce it back towards the moving average, or this could have another, pretty ugly down day. We want to watch and see how that reacts, and then watch and see how our indicators react in association with that, because until we see a slowdown of the momentum or some kind of a climax, we need a big bar and a big volume bar. Volume bar that's really spiking up on a down move. Then if we have that coming into support down here, then you could start to think, okay, we're getting some kind of a climax low. I want to play that potentially for some kind of a trade back up into resistance. So I think those are the things you want to be on the lookout for right now. Now, I did want to make a quick, let me see if I have it. Okay, I've got the zigzag. So a guy was asking me how to mark the zigzag, the higher highs and higher lows. Well, it's pretty simple. If you take a swing and you make a lower low, if the swing chart, let me just zero in on this. So I'm just doing this on the hourly chart. If your swing goes, so here's the last swing high, you made a higher high here. So this is a higher high. Hope everyone gets this. That's a higher high. And then we came down and we made a lower low. Lower low. All right. Sorry for my handwriting. Mouse writing. All right. Then we made a lower high. Lower high. Because we did not take out the swing low. That's the last swing high. So we made a lower high. Now we're making another lower low. Right? Another lower high. And then another lower low. Now, if we come back up like this and take out this high, now we're making a higher high. All right. So that's how you break those down. That's how you would do that. The zigzag makes it very, very easy to see. I'm a big fan of looking at that. And in times like this, you can do that. And you can even go down to like a 10 or 15 minute chart and run your zigzag and look for a full-fledged change in trend. That would mean either that, or you come down, you make a new low, and then you make a new high, and then you do that. So it's either you make two higher lows and two higher highs, or you go from a new low to a new high, make a higher low, and then a higher high. That's both of those are reversal patterns taking place. If you have that, you can even go down to a 15-minute chart and look for that now, and that'll give you kind of like an early heads up. We are nowhere near. I mean, this is still making lower high and lower low. We don't even have, I mean, if this turned up like that and did that, then we'd have that pattern on a 10-minute chart. So you got to be careful. I don't want to do that until I get into major support. Like I don't want to do it here because we're kind of like in mid-flight on the way down. We don't have any real support level that we can lean on right now. I think just breaking the 1, 2, 3 to the downside. We want to get this down a little bit closer to, into the lower 420s or something like that. Then if that happens, then we can start to go into the smaller time frame and do that if you don't want to wait for the hourly. One of the things I would like to look for is if that happens, let's say this drops down into this, and this comes down and does this, and we have divergence. Let's say the DI starts to diverge and MACD starts to diverge. Now I can go down to my 10-minute chart and look for that reversal pattern. That's the time. That's what I want to do. That's a 3 time frame setup. And you could go maybe even potentially, the safe way to do it is to buy options doing that, right? Playing for some kind of a snapback rally because we've gotten so oversold. We're coming into support. Really there's still pretty good longer term momentum in place. So that's how I would be looking at this. That's how I'd be playing it. That's what I'm doing on a daily basis. So let me know if you have any questions or comments. Thanks.